Well, things have continued to get worse for the Australian share market, which is still feeling the after effects of yesterday's interest rate cut from the US Federal Reserve. The All Ords fell by a pretty steep 1.2%, and it's been dropping nearly every day these past few weeks. So the market's pretty much wiped out all the gains it made in the last 3 months. This month isn't even over yet, and the market's already down 4.4%, making it the worst month for the All Ords since September 2022. Back then, inflation was at a 30-year high, and the Reserve Bank was playing catch-up by jacking up interest rates. This time, the sell-off is happening for a completely different reason, as central banks now reckon interest rates might not come down as quickly as expected. But the market's arguably looking a bit overvalued, so a lot of people thought it was a good time to sell. Speaking of overvalued, Commonwealth Bank fell more than 3% today, and despite all those brokers attaching a sell recommendation, CBA is still the world's most expensive bank when you compare its share price with what it actually earns. Other banks didn't do so well either, nor did gold miners, even though the gold price recovered a bit, though oil and iron ore are down. Overseas, it's a mixed bag, with markets in Asia rising, but Wall Street and the FTSE continuing to fall, while the Aussie dollar is buying 62.2 US cents, which is a 2-year low, and less than 50 British pence, which is the weakest it's been against the UK currency in 4.5 years. So, bad news for those flying to Britain this summer, unfortunately. And that's finance.